Lesson 15. Putting the stock-picking puzzle together. In this lesson, Bill O'Neill discusses how to thoroughly evaluate a stock before making a purchase.
I have numerous rules for selecting stocks. These rules come solely from studying extensive models of all successful companies every year since 1953. 60% of my method is devoted to fundamental analysis because I want to buy only really great companies that have unique new products or superior services. I'm looking for the true market leaders, companies that are number one in their particular fields, companies that are superior to their competition or have little true competition. Once you determine that you are operating in an uptrending general market, here are the factors you should consider. 1. Is the company's current quarterly earnings per share up at least 25%? Are the percentage increases in profits accelerating compared to recent quarters? Does it have 6 to 12 quarters of significant earnings increases up 50%, 100%, even 200% or more? Is the next quarter's consensus earnings estimate up a worthwhile amount? Have earnings in the past few quarters been higher than expected? If it's a growth stock, is each of the last 3 years of earnings up an average of 25% or more per year? Is the company's earnings per share rating 80 or higher? 2. If it's a turnaround stock, does it have 2 quarters of strong earnings increases or 1 quarter that is up so much that the 12 months earnings per share are back to their old peak? If 2 or more quarters have turned up, are the trailing 12-month earnings near or above the peak of the prior couple of years? How much are the consensus earnings estimates up for the next 2 years? 3. Does the company have 6 to 12 quarters of strong sales growth? And has that growth rate accelerated in recent quarters? Is the current quarter's after-tax profit margin at or close to its peak? Has there been a general trend of profit margin improvement over many quarters? Are the company's margins among the best in its industry? 5. Is the annual pre-tax profit margin 18% or more? It's okay if retailers have lower margins. 6. Is the return on equity 20% to 50% or more, and is its ROE among the very best in its industry? 7. Is it sales plus profit margins plus ROE rating an A or B? That would place it among the top 40% of all stocks in terms of sales growth, pre-tax and after-tax profit margins, and return on equity. 8. Does the company's management own the stock? 9. Is the stock in a quality price range? Quality comes at $16 to $150 for NASDAQ stocks and $20 and above for NYSE stocks. Remember, real leaders like Cisco Systems, Walmart, Microsoft, PeopleSoft, and Amgen broke out of their beginning chart bases several years ago between $30 and $50 per share before they had giant price advances. Price is a basic reflection of quality. Quality doesn't come cheap. 10. Is the stock part of a historically winning industry group, such as retail, computers and technology, drug and healthcare, or leisure and entertainment? Is it in one of the top 5 groups now? Check the 52-week highs and lows feature, New Highs List, on the Industry Groups page for the top 5 performing groups. 11. Do Investors Business Daily's small index charts on the Industry Groups page show that the current market favors big cap or small cap stocks? You want to go with the flow and not fight current market trends. 12. What broad economic sector is the market favoring? Consumer or high-tech? Growth or cyclical, which move up and down with the business cycle? Or defensive, food, utilities, and other things everyone uses all the time? Newer issues or older, more established companies? 13. Does the company's product save money, solve a problem, or save time with new technology? Or is it a new drug or medical technique? Is it widely needed or liked? Is it a product that encourages repeat sales? 14. Is the company's backlog of unfilled orders expanding? At what % of capacity is the company operating? What is the company's expected rate of future expansion? 15. Have 1 or 2 of the smarter, better-performing mutual funds bought the stock recently? This is an indirect fundamental cross-check because the better institutions will have done extensive research before buying. 16. Do you really understand and believe in the company's business? Have you seen or used its product or service? The more you know about your company, the more conviction you'll have. Now that you're dealing with a truly superior company, the remaining 40% is technical and timing analysis. You need both, not just one or the other. A big league pitcher needs more than a good fastball. He also needs a curve, a changeup, and, most of all, great control and discipline. Successful investors need more than one tool as well. 1. Check a daily chart service, such as Daily Graphs or Daily Graphs Online, to spot which of your prospects are forming a sound pattern and are under accumulation, professional buying. They must also be near a proper buy point. Analyze the week-by-week price and volume action. Write down the price at which you will begin buying the stock. After your initial purchase, identify a price area at which you will add a small amount as a follow-up buy if it continues to perform well. I usually add more once a stock is up 2.5 to 3% from my first buy. If the stock drops 8% below your exact initial buy point, protect yourself against a possible larger loss by selling at the current market price. This loss-cutting discipline, in the long run, will keep you out of serious trouble. 2. You want an increase of 50% or more in trading volume on the day you begin buying the stock, with the stock breaking out of a sound base. 3. Is the chart pattern a cup with handle, double bottom, or flat base? If it's not any of these, it may be faulty and failure-prone. 4. Is its relative price strength rating 80 or more? And is the relative strength line on the chart in a definite uptrend? 5. Portfolio management. Keep and try to add to your best-performing stocks and reduce or sell your worst-acting ones. And remember, stocks in sound-based patterns and near new highs in price are better than stocks nearing or at new low prices. 6. Check a long-term monthly chart to see if the stock is also emerging out of a long-term base over a number of years.
If you liked the video, please click the like button below and subscribe the channel. Summary. Once you determine you are operating in an uptrending general market, you need to pick superior stocks. Potential winners will have strong earnings and sales growth, increasing profit margins, and high return on equity, 17% or more. They also should be in a leading industry group. Investors Business Daily's proprietary data and the IBD Smart Selects to Mark corporate ratings will help you pick winning stocks.